Yes. Right. So, what is happening, people? Today is my technical analysis episode, and instead of like doing a pre-recording or pre-analysis, I thought I'd just do it all in one. So, yeah. Getting into this, just a preamble. Over the past few weeks, we've seen a lot of cases with a D variant. I was spelled wrong. A D variant or Delta variant, and basically it's like 100 times more infectious than the original coronavirus strain. It's like 60 times more. So the Alpha variant, or a variant, sorry, the UK variant, was around 60 times more, or 60%, not 60 times, 60% more infectious than the original variant, the Wuhan variant, and now the D variant is like 60 times more infectious than the UK variant. So basically, just do a little analysis, but what I have recalled from doing some research yesterday is that according to some French scientists, 95% of the population needs to be vaccinated in order to prevent like a really strong spread of the D variant. And obviously no country is near that threshold, so most vaccinated countries. So no country is as vaccinated as no countries has reached the 95% threshold. Sorry. So what that basically, fuck off. All right. What that basically means is that the D variant could spread really fast, and for that reason, we've seen a lot of sell-off in the dollar. Of course, the whole idea of the dollar was to obviously, in order for the dollar to continue going upwards, there needed to be confidence that inflation would rise. But with the new D variant, there's a potential for, like a higher potential for COVID lockdowns. When there's lockdowns, there's constrained growth, and there's not as much inflation that one would require for a rate increase or tapering. That means that the supply of dollars will continue to increase over the long term. And what does that mean? When people price in higher amounts of dollars in the future, then people are already making their bets. And in line with what Powell was saying, bouts of inflation are going to be temporary and inflation will be low, which means that there has been a sell-off in dollars as well as T-bills, USD bills, as well as most of the world's treasury yields. And treasury yields have been dropping, obviously, because there's been a rally in bonds, okay? So what that means for the dollar is that we're going downwards. And yeah, just like the Delta variant is really running through everyone. So yeah, first identified in India, makes up almost every new COVID case in the UK. So that being said, the chances are of another lockdown could increase very much so. And yeah, we're not prepared for this, and the current, like, the market is pricing that in, right? This is new news. We would have I said a few weeks ago that this is the first impulse, and of course the second impulse is always going to be a bit shorter than the first. And yeah, just do some Wyckoff here. Here is the buying climax. I'm going to notify that as the buying climax, and here is our spring zone, and we got that bearish engulfing over here. We've got that 2 tests of that zone, really nice. But I would say that this is our buying climax, and now this is our automatic range. And that means that we will stay within this area. So if I mark this line down here, I expect us to maybe range within this area. It's a daily chart. And yeah, so the original idea was that we would go upwards past this trend line, but now obviously respecting this trend line, it kind of makes sense. We've rejected this really nicely. We have that bearish, bullish breaker over here. So if we break that, then there's a higher chance that we will go lower. and it doesn't look too good for the dollar right now, which means that everything else can continue to rise. So monetary support for longer is obviously bad for the dollar, and that's basically it. So that being said, I'm looking upwards on everything else but the dollar for now. So let's go to the daily, and as you can see, my target now is going to be this red line, which is the automatic range. So let's put AR, and let's put what do you call it, buying climax for BC buying climax. Okay, so it's looking like we could go downwards, which means that I would look for entries around here. So let's put a dotted line over here, and let's see, sorry, let's get that dash line. So that's the entry area within this supply zone. Maybe even up at the top, let's go on the line chart, that's the close. So just put it over here. That's the entry for going downwards. I'm looking downwards on the dollar. So looking towards going over here. Boom. Nice, easy stuff. So let's look at the fundamentals this week. Before we get into things, we've got 10-year bond auction for the US, and it's looking like there's no forecast yet. It's coming home today, hopefully. So we'll have to see what happens on Monday morning. I saw on the Sun just now that businesses and schools to open late on Monday after Sunday's Euro 2020. People are selling tickets, scalping that shit really hard. Oh yeah. And sorry, my thought is fragmented right now, but as you can see, here's the COP data, and you can see that non-commercials are going hard on buying the US dollar, but I don't think that's going to be the case, because you can see that the supply of the suppliers of the US dollar do want it downwards. See, you can see that a majority of them are now short, and you can see that price is going to return. So that's just extra confirmation that we are going to see a downside. I would expect us to obviously change direction once longs are back at 100%. You can see here a few weeks ago, let's say at the start of January, we were majority long. And at the start of January, let's just see, just to support that hypothesis, at the start of January, we were at the bottom of the trend. So we saw that big bullish sentiment amongst commercials going upwards. So that's how you use Core Report. You just look at commercials basically for the US dollar. And you can now see for extra confirmation that 5.1% of commercials or the money supply are now long. Only 5.1%, which is just fucking crazy. And yeah, so we could just range in that area for a bit. Sorry, my thought is so fragmented. I've been just preaching this shit to my girlfriend, my partner, and we're saying like she goes on TikTok. I'm like, yo, this shit kind of like fragments your brain. And like I've been doing a lot of work recently, and it requires a lot of like time on the computer, searching, research, and your circuits in your brain just kind of short circuit. And when your brain short circuits, then you can't like think in depth for longer, which is kind of bad, I would say. Just gotta like kind of train your brain. It's like, yeah, your brain is being trained to think really in very shallow terms, whereas if you were to think deeply on something, then you would stay focused on it for a longer time. I was talking to my friend Mohammed about this, basically, and I got criticized about how I explained this, but what we have is like, you have a lot of communities in the world, and like communities of like hobbyists, okay? So for example, I was walking down a street in Camden Town, and I saw this guy, and it was like 10 p.m, just came out from watching at the cinema, we watched Black Widow, but yeah, we just came out, and this guy was like properly, he was roller skating backwards. He was like floating in the air. He was in the zone. His focus was incredible. Like he was really like loving life there. You could see it, like just the way his body moved. And it kind of like made me realize that like there's another place near Primrose Hill, and there's always like roller skaters there. Roller skate is such a weird community. There's one at the Emirates Stadium as well. But yeah, just near Primrose Hill, there's a bunch of roller skaters, and what they like do is they just hang out, right? They roller skate together. I don't know what they do. And what it made me think about is that these people have incredible amounts of focus. They love the fact that roller skating gives them so much focus, and they want to share that experience with others. They want to share experience with people with like minds, you know, and that's what builds a community. So same as like Hare Krishnas. So Hare Krishna, Krishna was obviously a Hindu god, and Hare Krishna is like a derivative of Hinduism. And what they basically do is, in order to feel closer to Krishna, they chant his name, Hare Krishna, yeah. And yeah, what they do, like, there's a massive community for this. They follow this religion. It's a religion, right? And because they can get into the zone so well, and like they always talk about how happy they are because they just chant this one thing. It's like they get into the zone, they get into a state of flow, and just the state of flow is just so good for building communities. It's so interesting. I just linking, basically, just to get back to my conclusion of this little mind fog or whatever, or fucking mind flow, whatever, I don't know. But anyways, I just want to link communities or building communities with the ability to go into flow. If you can go into flow on something, if you can give absolute focus into something, then you can share your experience with the community and you can work together to find new things, blah, blah, blah. So it's pretty interesting. You see with trading as well, a lot of people go into focus with that, scalping and stuff, sharing ideas. As long as you can share ideas, then you can build a community. And yeah, it's just a little thing I've been reading about, bringing primal branding into this. It's a book by something Hanlon, and also The Shallows. It's a book about how your brain, or people's brains, are going into like really, like they're losing attention really badly. So yeah, that's just a little sidetrack there, a little bit discourse. Hope you learned something there. But anyways, so coming back to the dollar, I'm looking downwards, and that is based on the chances of a second wave or third wave in the US. They say a third wave. It's been fucking just one continuous wave, in my opinion, but a third wave in the US, so to say, which could lead to more deaths, lower consumer confidence, and thus forth lower manufacturing and services PMIs, and therefore a decreasing supply in the economy potentially leads to higher inflation rates. I don't know. We'll have to see, because there's a constraining supply, but it doesn't seem the market is pricing that in right now. It's pricing in lower levels of inflation based on lockdowns and yeah, just lower economic growth. So therefore MP is not going to increase. And that being said, I'm looking to go to the AR over here based on COT reports as well. Simple. That's my thesis on dollar, and that's why I think it's going to go downwards. So let's go to Aussie dollar. Oh, actually, before we do that, let's go US 10-year, just to support. And of course, 10 years just been rallying recently. I don't know why that is, can tell you. But of course, so yeah, 10-year yield has been rallying. But of course, of this, the bonds have been, the 10-year bond has been rallying. And this is on the idea that inflation won't be as high as it will, as like, you know, the reflation trade people, they're saying that inflation is going to be very high, higher than the Fed is expecting. So being said, I'm going to go short on the dollar and long on anti-dollar. Aussie dollar, US dollar. So I'm looking upwards, and this is pretty much just Wyckoff here. Here's our selling climax marked by our spike in bearish volume. And then we got our automatic range here. And then we made that first spring, tested that area, but then yeah, kind of went back down. I told you last week that this was, or a few weeks ago, this was my entry area. We kind of rejected that really nicely, but then we went down further. But now we have closed Friday on a bullish engulfing, and I think we will continue that one. If you look on the 4 hour, you can see that there has been a massive spike in volume over this candlestick over here, which is kind of a indicative sign we're in supply. And when there's a spike in volume for the upside, then we can expect a climbing on price. And I would expect to get some more entries around here, around, I don't know why I've marked this out twice, SC. Around this red line, I would expect us to continue going higher. So I would expect maybe a retracement around this area. Even this is probably the lowest it could go before continuing upwards. That's my idea on that. So maybe even a range before continuing higher. So let's check the COT report over here. COT report. And yeah, so majority of non-commercials are short, but they're a bit batty right now. But you can see that majority of commercials are long on this, but it could potentially go down further. We'll have to see. It's not razor tight, or sorry, watertight, this thesis on Aussie dollar going upwards, but it's just on dollar weakness. So let's go to Kiwi. And Kiwi is kind of respecting, but it didn't actually come back down to this entry level. Remember, this is our selling climax, marked by that bullish spike, or sorry, bearish spike in volume, followed by the automatic range there. We rejected that range as expected and came back down to the selling climax, but we didn't go down into that spring area, which is interesting. We could in fact go down, but we'll have to see what happens with that. Of course, we'll have to wait and see if this breaks. That's the idea behind that. Let's go to the pound. The pound is going hard as hell, so that's really respecting the original entry. And I was long over here, fuck's sake. Oh, actually, I was, whoa, some bullshit. But anyway, I was long over here, kind of closed on this downside, stupid entry. Or actually, yeah, I was long around over here, and I got a bit of fucking scaredy cat, beardy cat, whatever. But I do expect us to continue this uptrend, but just make a little retracement over here, reject this area before doing something over here before going higher, based on dollar bears. I do expect just everything to range. You can't obviously go up right away. Ranging is the most likely market for now. EURUSD, same situation. The entry was a bit fucking bad on this. I didn't actually enter on this, I think. Did I? I don't know, don't remember. But we could come down. It's gone 4 hour. Got multiple lines here. It's kind of bad of me. Sorry, I apologize for that. But you can see that we did break this level, these candlesticks. That was our structure. We broke that structure with this bullish uptrend, and then we retested it to get some entries over here. And there was a lot of orders here. See that doji? There was quite a bit of volume on that doji, and then we saw that big up move afterward towards the later hours of Friday. So I do expect us to come back down, maybe range a little bit, even come back down to this support, but I don't expect us to go lower than this wick. Or we could, if we did do that, I think there would be a lot of orders around here before going higher. So that is EURUSD. Although, yeah, there is obviously this support and this supply zone over here. So there is a big supply over here, so I do expect us to reject it pretty nicely. But a range is most likely on this market right now. USD Swiss franc. And yeah, it looks like we're going strong on that. Obviously, we could potentially go upwards further. But this is kind of like self-explanatory. This is what the dollar is going to do. We saw that bearish, bullish breaker. We broke this level with this candlestick, Thursday's candlestick. And on the weekly, yeah, you can see. So that's kind of forecasting what the dollar is going to do. And I do expect us to go downwards on the dollar. So let's go to Zao. And you can see that the gold price is going to increase, and I'm aiming for 18. I don't even think 1820 anymore. I think we can go up to maybe 1860, or even just continue making higher highs. I don't know. We'll have to see about that. Resistance is still there. Potentially we could test it. We'll have to see what happens. But as the Delta variant kind of rampages and vaccines remain behind that 95% threshold, then I would expect us to just keep going upwards on gold. And there's also that thing about Basel III, so I might even do the research right here just to... Sorry, I just had a load of coffee, I'm a bit jittery, but yeah, come on, mate. Yeah, so if you go to analysis, this is pretty cool, but they give a bigger picture, whatever, and metals bullish, and there was one about Basel III. So Basel III is... billion banks. So prohibitively expensive by requiring the banks to amass huge new deposits to offset what Basel III considers the derivative liabilities of unallocated gold. So I think it's about, just to decipher this really quickly, what my opinion on it was for banks to have like a 1-to-1 of their gold deposits. So they would have to, so if they have paper gold, let's say they have 1 ton of gold physical, but then have like 200 tons of paper gold, which is just on contracts. Basel III, I think, is supposed to mean that these, like, let's say if a bank has those 200 contracts of gold, 200 tons of gold, they would have to, you know, have that in physical form and not in contract form. What that basically means is that the price of gold will increase because banks will have to demand that gold, if you know what I'm saying. They need physical gold now. It's Basel III. I don't know which government that is for. Seems like Swiss. Yeah, so yeah, you need to by mitigating risk through the ownership of fucking physical gold. I think it's 1-to-1. Sorry, so I don't even know, man. But anyways, so apparently this is going to be bullish for gold, and I don't know when it comes into a fucking count. 8th of June is a month ago, and that's been going up since like June. No, it hasn't. Fuck it, I don't know. Anyways, but let's say in a COT report, what's happening with gold, and yeah, so those who are supplying gold are 73% short. So we could potentially go down further. We just need this to increase. Those who are long, still long, quite a lot. What am I doing, man? Did it not update? Yeah, it didn't update for gold. What's going on? I've done it wrong. Fuck it, don't worry. Anyways, lost my fucking go. But anyways, what is it? Going up. Yeah, boom. And let's go to fundamentals to finish this off. CPI looking at a forecast of 0.5%, lower than expected. It's kind of being priced into the market right now. Core CPI is lower than forecast. Pardon me. Got the 30-year bond auction for the US. Bank statement for New Zealand coming in at 0.25%. Doesn't seem like anything's happening with that. I don't think there will change. There's no particular yeah, probably going to, I don't know, pound CPI year on year coming at 2.2%, PPI 0.6. Fucking Fed Powell testifying. Aussie dollar unemployment rate at 5% could be good for the Aussie, which is why we could have a like the idea, the thesis is that Aussie would go up this week. Also on Victoria and just a lot of cities being in lockdown, and now will go out of lockdown and boost because of pent up demand. If there's going to be a lot of people in lockdown, then we can expect markets to already price that in, and that's why I think we're going upwards on the dollar, Aussie dollar. Sorry, it's kind of robust thesis there. We've got Chinese yen. China's GDP quarter on year coming at 8%, which is decent, but previous was 18.3, obviously because of pent up demand, and it's on a quarter as well. So that's for Q4 or Q2, not sure. Q1. Manufacturing for the US, pretty low. That's for fully fed. Unemployment claims coming at lower than forecast, or lower than previous for the forecast. And Powell testifying again. CPI for New Zealand could be bearish for the Kiwi. And then retail sales, most importantly on Friday, at minus 0.5%, which is an improvement. So we'll have to see what happens with that. So that is your boy for today. Sorry about the ramble, I must say, but I'm looking down on the dollar for this week, just based on D variant and technicals. So technicals, D variant, so fundamentals, D variant, and then also COT data, which is looking downwards amongst commercials, or AKA the money suppliers. So D on Dixie. Safe. Bye bye.